Friends, Warren Buffett has popularized the term entry barrier. What is an entry barrier? It is basically an advantage in terms of product or process or pricing, which others will find very difficult to replicate or penetrate or beat. So friends, right now we will reveal two such stocks from the Indian stock markets which have high entry barriers in their own segment. They are leaders in their own segments but have been highly ignored by the stock markets. So friends, let's get started. Hello friends, my name is Shushmita Aditya Mukherjee. I'm a business coach, success coach, a career guide, and professionally I'm also into stock markets. I apply data science in stock market profession, and also I love teaching finance and artificial intelligence to students. So today, as I have said, I'll be revealing two stocks which are leaders in their market segments with high entry barriers but are being ignored by the stock markets for the recent times. Recent times means maybe a couple of years. So without further ado, let's get started. So friends, the first stock that we will be talking about here is, as you can see, GMM Pfaudler. It is a corrosion-resistant glass-lined equipment maker. So it makes vessels and other equipments which are glass-lined and they are corrosion-resistant. And the important thing is, friends, this business has a market share of 50% in America, 40% in Europe, 20% in China, and 50% in India. Let me show you the specifics here. It has a market share of 50% in America, 40% in Europe, 20% in China, and 50% in India. So it is sort of a market leader, right, in this vessel segment. Especially in the large vessel segment, it has a sort of a monopoly. In the small vessel segment, it is still facing competition. So friends, this is the product overview of GMM Pfaudler. Now let us have a look at how the numbers are faring. So friends, primary numbers that we want to define the performance with are the sales and the profits. That is the sales and the net profits. So here you can see from 2013 till 2023 or 2024, the numbers have gone up around 15 times. 213 crores to 3400 crores and above. You can see here, this is the revenue that we are talking about. The numbers in 2013 are showing to be 213 crores. And in 2024, it is 3446 crores. So 3446 crores. That is the revenue they are garnering. Now friends, while we want to judge a company's product quality, an important metric there is the operating profit and the operating profit margin. So here you can see the operating profits and operating profit margins. So it started with 8%, then increased to 12%, then went up to 15 and 19% in 2020. But then again, it came down a little bit, 14%, then 11%. Then again, it has come up to 14%. So that's how the operating margins are doing. In terms of interest rates, they hardly had any debt. They hardly had any debt till 2020. But after that, they have taken to the strategy of taking up debt because I think they find that their market share is secured to some extent because of the product they have. And that's why they can leverage it by taking up a little bit of debt and growing faster, right? So that's what they are doing. They are leveraging a little bit and trying to grow faster. Now the next point that comes is the net profit. How much has the net profit grown? The net profit has grown 17 times in last decade. So you can see here, the net profit was 10 crore in 2013 and it has increased to 19, 20, 31, 43, 51, 71, then 210 and now it is 174 crore as of March 2024 as we speak. So this has grown 17 times, which is like a compounding rate of 25% per year. And for a market leader, for it to grow at this pace for this long is quite remarkable, friends. Now let us have a look at their return on equity and return on capital. So they have a return on capital of 19.1% and return on equity of 19.6%. For a debt to equity of 0.94, which is almost 1, these are decent numbers. Not that great, but not bad also. These are decent numbers. Okay, friends. Now, let us have a look at their shareholding. So the promoters are holding 25.18%. The promoters are holding 25.18%. The FIIs are holding 14.62%. That is, the foreign institutional investors are holding 14.62%. The domestic institutional investors are holding 15.8%. And the rest 44.4% are being held by the public or the retailers and the HNIs, right? So the FIIs and the DIIs are holding a very, very significant proportion of the outstanding shares or the floating shares, right? So this is a good sign. So we have already looked at their debt, their interest coverage, their return on equity, their return on capital, their profit growth, their sales growth, their shareholdings. Now what we'll look at is their credit ratings. So we'll look at the CRISIL credit rating now. The long-term rating has been changed from stable to positive. So it was initially CRISIL AA minus stable. Now it is CRISIL AA minus positive. And the short-term rating has been kept the same. It is CRISIL A1 plus. In the CRISIL report also, we see the mention of the market leadership. You can see here, friends, key strengths. Strong product quality and large production capacities have made the company the market leader in the global GLE segment. The market share is 50% in America, 40% in Europe, 20% in China, and 50% in India's GLE segment. So this is a very good sign. This is a very good sign, friends, for a company. Now, let us look at the management who are leading this company. So, friends, we can see here the chairperson's name is Mr. Prakash Apte. Mr. Prakash Apte has had 42 years of experience in management and leadership. Education-wise, he is a B Mechanical from University of Pune, Diploma in Business Management from University of Mumbai, and he has also taken executive and leadership development programs at Harvard Business School. He has served as a non-executive chairman of Kotak Mahindra Bank previously, from 2018 to 2023. He has also been a non-executive chairman of Syngenta India Limited, an agricultural business company in India. He has been in the boards of Fine Organics, Blue Dart Express, Kotak Mahindra Investments Limited, Kotak Mahindra Prime Limited as an independent director. So friends, there are many testimonials here to his leadership qualities. He has been into multiple very significant roles, as we can see here, friends. Then Mr. Tarak Patel. Mr. Tarak Patel is the managing director. He has been the managing director of GMM Pfaudler since June 2015. He has been an executive director of the company since 2007. Previously, Tarak has served as a vice president, sales and manager of corporate development. Prior to joining GMM Pfaudler, Tarak was working with Universal Consulting. Tarak has a BA in economics from University of Rochester, USA, and an MBA degree jointly conferred by Columbia Business School, London Business School, and University of Hong Kong Business School. So here we can see these are qualified people with lots of experience who are in the board of directors for GMM Pfaudler. The other board of directors are Mr. Nakul Tashniwal, independent director, Ms. Bhavna Mishra, independent director, Mr. Ashok Patel, non-executive director, Ms. Shilpa Divekar Nirola, independent director, Mr. Vivek Bhatia. So I'll not go into the details of each of their profiles. They are all very qualified. You can go and see for yourself, friends. So the management is a very strong management. And it is also reflected by the fact that lots of FIIs and DIIs have conferred their confidence in this company through their investments. Now we go back and try to make a conclusion about it. So friends, should we invest in it? I think a lot of things are being ticked here. Fundamentally, the management is strong, the product is very good, they have a market leadership product, their profits are growing, their sales are growing, they have taken debt in a controlled manner and have upgraded their credit ratings. And FIIs and DIIs are here to reconfirm our trust in the company, that they are also investing in the company, right? In terms of valuation, friends, the current P ratio is 40.09. 40.09 in itself is not that low a valuation. But friends, two very interesting things I want to show you. The first is the PEG ratio. The PEG ratio. Here it is 1.41. Now PEG ratio is basically the PE ratio divided by the growth rate. For a market leading company to have a PEG ratio of 1.41 with a P ratio of 41 nearly means the growth rate is very high. Let's look at their growth rate, friends. You can see here, the last 5 years sales growth is 47% annually and profit growth is 29% annually. These are huge numbers. For a market leader, these are huge numbers, friends. Now, that is another tick that we have in favor of GMM Pfaudler. So we are looking at the valuation. The valuation is 40.9, which is not that low. But in terms of its growth rate, the valuation is decent. it's not that high either, right? The second thing is, let's have a look at the chart. You will understand what I'm trying to say. This is the 5-year chart of GMM formula. This is the price chart, friend. You can see here the growth was happening for the initial period only. This is the growth period. Till say September of 2020, the growth was happening. After that, it has gone absolutely flat. The markets have totally ignored this stock. Despite its revenue growth, despite its sales growth, they have just ignored this stock. So this means this stock has been ignored for 4 or 5 years almost. So this is a very, very interesting point, friends. The growth rate, the PEG ratio, and the market ignoring it for the last 4 years at least, 4 to 5 years. All these things taken together, the pricing, the valuation, the fundamentals, the management, everything taken together, the debt, the credit rating, the growth rate, everything taken together, I think this is a stock that you should consider buying. Now we'll move on to the second stock. So friends, the second stock is Eicher Motors. Now why have we opened such a common stock which everyone knows about and saying that we are very excited about it and we want to see whether this stock is investable right now or not? There are a few reasons, friends. We will just analyze the stock first and then automatically you'll be able to understand what I'm talking about. So let's see the performance numbers. The primary performance numbers are sales and profitability, friends. So in the last 3 years, the stock has grown in sales and in profit 2x. Let me show you. In 2021, the sales has been 8720 crores, 8,720 crores. And in 2024, it is 16,536 crores. So this is a two-fold increase almost. And in terms of the net profit, if you want to see the net profit, the profits have grown 3 times, 3x. 1,347 crores to 4,001 crores. So the net profits have increased profusely. So friends, there is no denying that in its own segment of two-wheelers, it is undoubtedly a clear market leader. In the 250cc to 750cc segment, it has a market share of 88%. In the 125cc to 250cc, it has a market share of 26%. And not only that, a huge chunk of its revenues also comes from the commercial vehicles where also it holds significant market share. Let me show you. So friends, here you can see 250cc to 750cc 88.5% market share. Motorcycles of 125 to 250cc, it has 26.6% market share. Then the Volvo Eicher commercial vehicle segments, it has 17% market share. Bus segment, it has 19.8% market share. Eicher HD trucks, it has 8.4% market share. So friends, these are very, very, very significant numbers to take. So friends, this company is either in a oligopolistic market or in a monopolistic market. In the 250cc to 750, in the 250cc to 750cc market, it is definitely in a monopolistic, almost monopolistic position. In the rest of the segments, it holds oligopolistic positions because there are limited number of players, 5, 6, 7 players. And all of them are having significant influence in the market, right? So here we are, one of the very, very significant players in the commercial vehicles and two-wheeler segments. And it has been ignored by the markets from April 2024 till September 2024. There has been hardly any growth. You can see here. You can see here, friends, the prices are going sideways and even coming down till the end, right? In March, there was some growth, but compared to the growth rate of the company in last 3-4 years, the prices have not grown at all. And if you see the valuations, let me show you the valuations, friends. The stock PE is 30, right? The stock PE is 30. But if you adjust it for growth rates, the PEG ratio, that is P ratio divided by the growth rate, it is 2.37. Now, to give you a context of this, let me show you the growth rate of another two-wheeler company. Let me show you Hero MotoCorp. See here, friends, the PEG ratio is 10.2. The PEG ratio is 10.2, which means P ratio divided by growth rate is a much higher number, which means growth rate is much slower. Despite it having a P ratio of 24.5, which is less than that of Eicher, it still has a very, very high PEG ratio, which means growth rate is much less. Growth rate is much less compared to Royal Enfield or iShares. Let me show you the growth rate of iShares. So in the last 3 years, the growth rate has been very high, which is clearly seen in the numbers. The 3 years profit growth is 44% CAGR, that is 44% annual compounded. And sales growth in last 3 years is 24%. 24% in last 3 years. So in the last 3 years, the company has grown profusely, but the prices have not grown that much. The prices have largely ignored this growth, right? So do I think this is a good opportunity to get into the stock? The growth has moved ahead of the pricing. If you take into account other competition like Hero, like Bajaj, I think the growth rate has taken over the price of Eicher Motors. Their interest coverage is 104, which means they hardly have any debt. But despite that, let me show you the credit ratings. It is AAA stable. AAA stable. This is the top class rating for a company, right? AAA stable. So that's okay. Also, let me show you the promoter holding here. The promoter holding is 49.1%. FII holding, foreign institutional investor holding, is a whopping 27.61%. DIIs are holding 13.67% and public only 9.52% of the float, friends. 9.52%. So most of the floated stock, that is stocks which is not owned by the promoters, is owned by either the FIIs or the DIIs. So they know something that we are largely ignoring, right? The public is largely ignoring what they know. What they know, I think, is their future prospects and their growth prospects are being ignored largely by the markets. And this advantage has been taken already by the FIIs and the DIIs. And I think as a retail investor or an HNI investor, we should also consider buying into this stock. So that's it, friends. That's it for Eicher Motors. Thank you so much, friends, for being with me in this video. If this video added value to you, please like the video and subscribe to the channel for more such content. A related topic video is right now there in the screen about investments and stock ideas, which you can watch right now if you wish. If you want a full-fledged diversified portfolio of 50 plus stocks to be built for you, which consists of microcaps, small caps, recently listed stocks and IPOs, growth stocks, value stocks, and blue chips, please check the link below. Thank you so much. See you in the next video, friends.